All right. Hello, everyone, and welcome back to the channel. I'm Joshua, a retirement consultant helping people in their 40s, 50s, and 60s build smarter and more confident retirement plans. If you're watching this in 2026, you're probably asking yourself one big question. How much can I actually save this year in my retirement accounts without triggering taxes or penalties? The IRS just released the official 2026 contribution limits, and they went up again, which is great news if you want to accelerate your savings. In this video, I'm going to break everything down in plain English. The new 401k and 403b limits, IRA contribution limits, catch-up contributions, and the powerful mega backdoor Roth strategy, and most importantly, how these numbers translate into real dollars you can put away this year. I'm going to use simple, relatable examples so you can see exactly what this means for someone like you. And by the end of this video, you're going to know precisely how much you and your employer can contribute in 2026, and you'll have a clear action plan to maximize every single dollar. If you're new here, hit that subscribe button and turn on notifications. I release practical retirement videos every week. Let's get started. So before we jump into the numbers, let's talk about why this actually matters. Every year, the IRS adjusts these limits for inflation. In 2026, we're seeing solid increases, and that pre-retirees and high earners have more room to save in tax-advantaged accounts. Why should you care right now? Well, if you're behind on savings, these higher limits give you a chance to catch up faster. If you're already maxing out, the mega backdoor can let you save tens of thousands more. Taxes and Medicare premiums in retirement are heavily influenced by how much you save now within the right accounts. Sequence of returns risk is real. Saving more money today gives you a bigger cushion later. I've seen clients add 20,000, 50,000 extra per year by just understanding these rules properly. So let's make sure you don't leave any money on the table in 2026. Let's start with the most popular plan, the 401k. For 2026, employee elective deferral limit, what you contribute from your paycheck, $24,500. This can be traditional pre-tax or Roth 401k, whichever fits your tax situation better. Now, for those age 50 and older, the catch-up contributions, standard catch-up is an additional $8,000. Total possible from your paycheck is going to be $32,500. Super catch-up for ages 60, 61, 62, or 63, an additional $11,250 instead, so the total possible is $35,750. A new rule in 2026 is if you earn more than $150,000 in wages in 2025, your catch-up contributions must be made as Roth after-tax contributions, assuming your plan allows it. Overall plan limit, Section 415 limit, this is the total that can go into the plan from all sources. It's your contributions plus your employer match plus profit sharing plus after tax. So it's $72,000 in 2026, up from $70,000 last year, with standard catch-up up to $80,000. Now let me give you some real examples. Sarah, age 54, her salary is about $110,000. She can contribute $24,500 regular plus an additional $8,000 catch-up. So total, she's able to contribute about $32,500 from her own paycheck. If her employer matches 4%, that's another $4,400. So total going in, it's easily going to be over $36,000 this year. Another example, Mike, he's 62 years old. He makes $180,000 a year. He can do $24,500 regular plus an $11,250 super catch-up, totaling $35,750 from his paycheck this year. Plus employer contributions, he could push close to the $83,250 overall limit. All right, guys, so for the next part of the video, we're going to be talking about individual retirement accounts, traditional or Roth IRA. For 2026, regular contribution limits are up to $7,500, which is up from $7,000 last year. If for ages 50 and older, catch up an additional $1,100, totaling $8,600. You can split this between a traditional and Roth IRA, but the total across all your IRAs cannot exceed these numbers. Important reminder, to contribute to an IRA, you need to have earned income, wages, self-employment. Also, direct Roth IRA contributions have income limits that phase out at higher earnings. That's where the backdoor Roth strategy really comes in for many people. I'll talk about more the backdoor strategies later, but the IRA limit is still a valuable tool, especially if your 401k options are limited or expensive. Now, for one of my favorite advanced strategies, which is the mega backdoor Roth. This is how high earners can contribute way more than the normal $24,500 limit on an after-tax basis, and I convert it to a Roth to grow. Here's how it works in 2026. Your first max, your regular employee deferral is $24,500. Your employer may add a match or profit sharing, and then you can make after-tax non-Roth contributions up to the overall plan limit of $72,000 or higher with catch-up. After subtracting your regular deferral and any employer contributions, many people still have $35,000 and $47,000 of after-tax contribution room left. If your plan allows in-plan Roth conversions, you can immediately convert that after-tax money into the Roth portion of your 401k. Future growth and qualified withdrawals are then completely tax-free. So what should you do right now in 2026? Well, here's your action checklist. Log into your 401k portal today and increase your contribution percentage to hit new limits. Check if you qualify for the higher catch-up, especially ages 60 to 63. Ask about HR after-tax mega backdoor availability. Run your own numbers. How much room do you actually have left this year? Consider coordinating your 401k with IRA contributions and backdoor Roth if needed. Review your overall retirement plan. Saving is amazing, but it has to fit your tax bracket, cash flow, and your goals. If you want help running these numbers for your specific situation, click the link in the description to book a free retirement strategy call with me. I review contribution stages, tax planning, and withdrawal limits with every client every week. Drop your questions in the comments. What's your biggest retirement savings goal for 2026? Do you have access to the mega backdoor at work? Are you age 60 to 63 and planning to use the super catch-up? I read every comment and try to reply when I can. If this video helped you understand the 2026 limits better, please give it a thumbs up and share it with a friend who's planning retirement, and subscribe for more practical retirement content.